Did you know that apart from the 10 years validity of the visa, the long-term residence visa or LTR is also offering a very attractive tax benefits for LTR visa holders? Today, we got a question from Mark, a highly skilled professional considering applying for the high-skilled professional LTR. His question is, I heard LTR visa holders get tax benefits, but how does it work and how much tax do they actually pay? So in this video, I'm gonna take you guys through a quick overview about the tax benefits of the LTR. One of the biggest advantages of the long-term residence or LTR visa is the tax benefits. And the LTR visa holders who have the high-skilled professionals LTR who work in Thailand. So instead of paying the tax in the progressive tax rate, starting from 5 to around 35% tax rate, the highly skilled professional LTR visa holders pay only 17% flat tax rate on their income from employment in Thailand. Considering that the requirement is that you have over 80,000 USD of income per year. If you get a salary, commission, and bonus combined of around 5 million, your tax, when it is calculated based on the progressive tax rate, would be around 1.2 million baht. That's a lot, right? But if you apply the 17% tax rate because you have the high-skilled professional LTR visa, your tax will be lowered to around 800,000 Thai baht. So it is around like 1/3 of the tax saved with this LTR visa. And for the people who apply for wealthy pensioner, global wealthy citizens, and work from Thailand LTR, for the holders of these types of LTR visas, there is also a tax benefit, which is a tax exemption on your foreign-sourced income brought into Thailand. With the tax benefits for the LTR visa holders, you might also want to be careful on a few things so you don't end up paying more tax or getting fined for not paying the tax that you're supposed to pay. It is important to note that for high-skilled professional LTR visa holders, it is true that you get the 17% tax rate on your salaries from employment with the company tied to your visa and work permit. But the foreign source income brought into Thailand and your income in Thailand that doesn't come from the employment that I mentioned before will not be subject to the 17% flat rate. So if you have other incomes or bring income from overseas into Thailand, you have to be careful and they have to be reported separately. For wealthy pensioner, wealthy global citizen, and work from Thailand LTR visa holders, it is also important to note that the tax exemptions are on the foreign source income brought into Thailand only. For example, for wealthy pensioners or wealthy global citizens who also work in Thailand under a work permit, your income from the employment in Thailand is not exempted from personal income tax, and you have to pay tax based on the progressive tax rate. And if you have investment income in Thailand, for example, like capital gains or dividends or interest from your investment in the stock markets in Thailand, those are also subject to the applicable tax based on the revenue code. So it is still important for the LTR visa holders to plan and structure their income effectively throughout the different jurisdictions and throughout the different sources of income, and also making effective use of available tax credits. And we highly recommend that you talk to your tax specialist in order to ensure the most effective way to actually handle your taxation. Thank you for watching. And if you would like to leave us comments or messages or questions, we would appreciate if you can contact us through the contact form. See you in the next video.